Kraken filed million forms because small crypto transactions are colliding with old tax reporting rules. The unusual part is most of the filings covered amounts under $50, raising the question of whether compliance effort is out of proportion. The story starts from a concrete fact. Kraken filed 56 million IRS forms for the 2025 tax year, with many linked to small gains. The story is less about tax season noise and more about threshold reform. The anchor number is 56M forms, while under $50 shows the scale already visible. That keeps the opening question tight. Can Kraken move past Congress language without the story outrunning its evidence? A viewer who only sees tax season noise misses why $10 threshold and staking timing define the risk range. The useful baseline is the exchange is pushing Congress to raise the current $10 reporting threshold and create a broader small transaction exemption. This is the information viewers need before attaching a larger conclusion to the story. The scale marker is 56M forms, and the second marker is under $50. Together, those details show the story's real boundaries. They also make it easier to separate a confirmed development from a marketing claim, a rumor, or a price-only reaction. That baseline also explains why staking timing belongs in the setup rather than the conclusion. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The story works through a low threshold can turn everyday crypto activity into millions of forms. The burden lands on platforms, users, and IRS reconciliation. That mechanism is important because it explains why the headline can change behavior before the final result is known. It puts Congress language at the center of the next test. If the mechanism is strong, the story can move beyond attention. If it is weak, the pressure stays unresolved. The mechanism ties 56M forms to $10 threshold, so the next reaction is not random. The consequence is concentrated first around IRS. Retail users can face tax paperwork for tiny trades, while exchanges carry growing compliance costs even when tax revenue may be limited. From there, the spillover depends on whether the pressure point widens or stays contained. The story's practical value comes from identifying that boundary. The scale marker is under $50, and the next constraint is staking timing. Congress also matters here, because it shapes the route from threshold reform to actual decisions. The open question is still Congress has not settled the threshold question. Stablecoin-focused provisions may not cover Bitcoin or other digital assets. That unresolved piece should stay separate from confirmed facts. It prevents the story from turning into a claim that the evidence does not support. The useful proof would be tied to Congress language. Anything else is less valuable for a viewer trying to understand the risk. The proof has to appear in Congress language, not just in repeated claims about Kraken. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For Kraken Filed Million, the next signal is whether lawmakers expand de minimis relief beyond narrow stablecoin language and address staking timing. That is the detail that would move the story beyond setup. Until that signal arrives, the strongest read is to track threshold reform and avoid overstating the outcome. The ending point is concrete. Kraken needs confirmation around Congress language, not just more attention. That is why the final read stays tied to $10 threshold, staking timing, and Congress language.